presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday afternoon, just after 3 p.m. Eastern Time, and we have markets in the red. Chairman Powell speaking this afternoon, but there's a lot going on in this market. Not sure he's the one that was pulling it back. You did get an acceleration, though, on some of the comments that he had. Stock prices, fairly highly valued, and yeah, talking about, well, let's not. We'll pull it up right now. Yeah, Jerome Powell. Oh, come on, get up there. There he goes. Describes rates as modestly restrictive, keeping the door open to cuts, modestly restrictive. There is no risk-free path. Well, they have two mandates, and they're both battling right now. So nonetheless, you got Powell talking, you got markets escalating to lower prices right now. Tech stocks trading lower. S&P's off by 0.7% right now. We're coming down to the lows that we had at about 140. You have the NASDAQ 100 off about 0.8% or 202 points, 24,800. The Dow was higher. Now we get some movers in the Dow, like Goldman, UNH, but the Dow was up to 47,055. Just like that, you give up almost 500 points. We're trading at 46,592. The Dow off 0.3% or 132 points in the Russell. Negative by 7 points right now or 0.3% as well. Bitcoin off about $280, 111,970. Ethereum chopping around near 4,200 at 41.79, up by $40. Crude quite a bit from yesterday's low, as crude goes from 61.61. We're at 63.72. And yeah, you have President Trump, and I heard some of the wording in terms of, I was running around to a couple appointments today, middle of the day, and they were playing the comments on Bloomberg in terms of President Trump's, and he was asked if Russian airplanes get over NATO, should NATO countries shoot them down? He said yes. Doesn't exactly mean that's what's going to come, okay? But nonetheless, tensions ratcheting up, and you have crude pushing $1.45 to the upside, 63.73 right now. Gold having quite a day, but gold even. Look at this. Just in the last few minutes, gold traded off $25. What's going on there? We were up to 38.24 in the pre-market. We're back to 37.89. You jump over to the dollar, and no move in the dollar. 97.26 in the dollar. You jump over to yields right now. We're pushing about 4.13. 4.13 on the 10-year. We jump around to some of the movers. So NVIDIA, almost all of yesterday's gain, off 2.8% or $5.10 in the red to 178.50. Amazon, talk about a move, man. Amazon down $7 almost, or 3% on the dot, to 220.80 right now. Jump around to some of the other Magnificent Seven. Apple off about 0.8% right now. Google off about 0.5%. Microsoft shares down 1.1% right now. And yeah, you take a look at this heat map. Here's your NASDAQ 100. Okay, so very few equities. Micron is up 1.1. Intel up 2.6%. AppLovin up by 2%. We got Gilead up by 2.3%. Everything else dramatically in the red. You jump over to the Dow. And look at that. Goldman actually rolling over. Goldman was one of the big benefactors today. When you got a price-weighted index and you got a stock that trades at $800, I mean, look at this. Goldman just gave up $20 from where it was at the highs, folks, okay? I always love running this over. So Goldman gives up $20. There's Goldman, $800. And meanwhile, you have equities like Verizon that trade at $43. Verizon's in the Dow, and it might as well be a meaningless company in the Dow because it trades at $43. And meanwhile, Verizon, I know I'm digressing, but Verizon is a $182 billion company. and it has 1/20th of the effect on the Dow than Goldman does, being an $800 company. And meanwhile, Goldman is only a $243 billion company. So a $243 billion company has 20 times the impact as Verizon does as a $182 billion company. Nonetheless, industrials, but that was a big factor. You had Goldman, dramatically higher. Dow was dramatically higher. You give it back. UNH, was up to 352. You give it back. We're at 347, still up by about 1.9% right now for UNH. Jump around to some others. Disney off about 0.6% right now. Netflix shares off about 0.9%. Paramount Skydance, look at that acceleration, trading up by $1.36, up by 7.3% to $19.97. And Warner Brothers Discovery up by 16 pennies. Stay tuned, folks. Come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. S&P's right now off by about 43 points. And right back to the lows of yesterday. We bounced near 6,700, and we're getting one of the first bounces we've had. We've had three of them since we made that acceleration. You get volume at the lows at about 145 this afternoon. And you break lower. All right. So, Mr. Powell, we had a lot of Fed speak today. Powell describes rates as modestly restrictive. Seems like he didn't make too many headlines, but markets reacting today. Two-sided risks mean that there is no risk-free path. Cutting rates too much, too fast could allow inflation to continue. to run closer to 3% than their 2% target, he said, while leaving a restrictive policy stance in place for too long could unnecessarily soften the labor markets. Well, that is the job description, Chairman Powell. Powell avoided giving strong hints about the Fed's next meeting. So their next decision is October 29th. The one after that's December 10th. Powell restated his assessment that tariff increases were likely to lead to one-time increases in prices that could take time to work through the supply chains. A one-time increase does not mean all at once. You know, his press conference on the heels of their meeting last week, though, you know, he wasn't saying everything, but he was indicating that beyond the payroll numbers, there was weakness. And one of the things he was talking about was that people were anticipating the inflationary forces. But one of his comments was the weakness in the economy makes it very hard for that inflation to run away. And that's why they're erring on the other side. Okay, so normally, yes, inflation can run away, it can run hot. But they're seeing factors in the economy that make him think, and the committee, that the risk to runaway inflation is not as great as many people think because the economy is so weak and what they're seeing in there. And then we jump to other Fed officials. 3 Fed officials see advantages to a range for inflation target. Yeah. No more 2%. Isn't it amazing? This is what everyone was going to say. This is what we're all talking about, right? Yeah, we don't need to get back to 2%. Let's just get near 2%, right? 3 Fed officials spoke favorably of the idea of a range for the U.S. Central Bank's inflation target rather than the hard target of 2%. Stephen Moran, Michelle Bowman, Raphael Balstick all discussed the idea in separate venues this week. Their remarks follow the completion of a once-in-5 years review of the policymaking framework in August, in which changes to the inflation target were excluded from the outset. Okay? Well, that doesn't mean that won't take place in the future. Mr. Moran, a very precise inflation target can lead to excessive micromanagement, adding that the central bank should be open to alternatives. And what blows me away is Biden caught so much grief for the inflation factor, right? And now here we are with new people in from Trump making the argument of, come on, do we really need an exact goal to bring inflation back down to 2%? Of course it can be difficult, but we are not back at 2%, folks. It's not even close. He said a return to the Fed's practice prior to 2012, a pursuit of low and stable prices without an explicit numerical target, is an interesting way of doing things. And listen, my take is that that's gone, right? The 2% deal is gone, folks. Yeah, now, you know, we'll see if he comes back if we're living in different times, but we're living in times right now, okay, where NVIDIA, like I was talking about this morning, and I'll have to pull this article back up, folks. If you didn't check it out, I was talking about an article this morning about the circulatory nature of NVIDIA investing in OpenAI, OpenAI making a deal to invest, not even invest, right, a contract with Oracle, Oracle then making sure that they can buy enough NVIDIA chips to service that contract with OpenAI. So what's happening? NVIDIA invests $100 billion in OpenAI. And meanwhile, that assures NVIDIA that Oracle can buy $350 billion worth of their chips. How does that work? That's what we're living in, though, right now, okay? And as long as we're living in that, yeah, they're going to run it hot. And they have made the decision that we're running it hot. Debt is out of control, and we do not need to be at 2% because we're going to grow this economy hotter than that. And if we really run hot, then we're going to have the ammunition to cut rates. That's where this administration, I think, is. That's where Mr. Moran, I think, is. He doesn't like the 2%. He wants a range. And guess what? They don't want a range below 2%, though, folks, right? They want a range 2% and above. Okay, so a range is okay, but they don't want 2%. If you wanted a range, you could have a range centered around 2%. They want a range above 2%. And we're going to run it hot. And then, you know, when you talk about housing right now, folks, you know, my take is, we'll jump around to some of the housing stocks. They are going to run this thing hot. And there are risks on both sides, like Powell's talking about, okay? And it's the judgment call of the independent Fed, but everybody, it's just a judgment call, right? So that's why we want an independent Fed, but it doesn't mean Chairman Powell's correct. Okay, this administration, they want to run it hot. When you talk about the debt that's out of control, one way to alleviate future debt payments is to inflate away those debt payments. And if you're telling me my biggest risk of running the economy hot is that all of this debt that we're taking on right now is actually going to be payable in dollars that'll be inflated away to a certain degree, that's our risk. And they'll bring it back down. But guess what? We see how that goes. So as you know, who does that hurt out there, though, if that happens? The risk is the savers, folks, because the risk of running it hot, 2%'s out the window, we're going higher, and, you know, this market has a cut priced in coming October 29th. It's thinking we're going to get a cut December 10th, and then no matter what, you get a new chairman in May, or woman, okay? So the pressure is going to be on rates to be lower in the near term. And that is where we find ourselves. Home builders, though, pulling back from some of the highs. D.R. Horton up by 0.5% this afternoon. You have Lennar up by about 0.9% right now. KB Homes off about 0.5%. Jump around to Tesla shares, off about 1.5%. We check back in on gold, up by about $12. But yeah, as I was coming on the end there, we got a little bit of selling on gold. Look at that selling. On a daily basis, that's some volume as well. Up to 38.24. Pretty remarkable that a month ago we were trading at 33. What's the low there? 33.62. Up almost $500 in a month from August 22nd. You jump over to Disney shares. So Disney, they're going to be raising prices. Why not? The price battle is on, and it is remarkable how much all these services are costing these days. But yes, Disney's going to be raising prices. As Mr. Kimmel's back on the air tonight as well. So a couple headlines there. And what's amazing is, so I just transitioned my Disney subscription to one that includes ESPN. But the remarkable thing is I just did it for football. And so they're going to lose me on ESPN the day football is over. Netflix is the only company, well, I shouldn't say that because you have kids in the house. Disney's probably not going to be lost either. We got Spidey and His Amazing Friends, all that stuff. But yeah, many of these streaming services are going to be canceling and coming back. You can't keep them all anymore. It's just too expensive. These prices taking place October 21st. They're jacking up prices on Disney. Yeah. How about almost $189 a year is what they're talking about for Disney alone. All right, folks, stay tuned. We're coming back with our man Tim Ord. We'll talk some markets. We'll talk some metals. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have the S&Ps right now off about 0.7% in the red, off 47 points, trading at 67.05. NASDAQ 100 off by 0.8%, or 196 points in the red right now. And you got the Dow off by 0.2 and the Russell off by 0.3. Right now, folks, as we do each and every Tuesday and Thursday at 3:30 p.m. Eastern Time, we're going to talk to our man Tim Ord. You can reach Tim at his website every trading day, folks, ord-oracle.com. And don't forget, he's got a couple of great webinars under that services tab, the secret science of market tops, how to identify them, and the 6 secret ratios every trader should know. We talk about some of those ratios during this segment each week. Tim Ord, good afternoon.
Good afternoon. Good afternoon. Still expected pullback. We were talking last week. I thought we might see a consolidation. I still think that's in the cards. It's kind of been a weird market. Actually, we did have on this rally up, kind of going up here. You know, we had I shaded the areas in pink again, where the trend was in bullish territory. In other words, up above 1.2, that shows panic. Panic only forms at lows. And we've been rallying over the last couple of weeks, and there's really no trend readings up in that rally to keep the rally going. So I was expecting a pullback down into this panic area right here between 640, 650 on the SPY. I still think we're going there. Seasonality turns bearish starting today. It runs for about a week and a half. So I'm thinking we're going to get a pullback. At one point, I was going to look to short the market, and normally this market's really strong. I don't think the pullback's going to be much. Again, I think the buy signal is going to form in this area. The reason why I think it's going to form in this area is once you get panic in a price range, normally when you go back into it, the market will panic again. The trend will rise up to 1.2 or higher, and that'll say that area becomes support, and that's the area to buy, and that's what I'll be looking for. So I'll be looking for a trend reading on the close up around 1.2 or higher to signal the next low, and I think will form between 640, 650. So that's that. We have this is the VIX. SPX VIX ratio, top window, next window down is the SPY. It's kind of the same thing going on here. Trouble with the VIX is it just warns you that a high is approaching. It doesn't really signal the exact top. A lot of indicators kind of hard. picking tops is kind of hard. Picking lows, because the best to pick lows are a lot easier, because when you get into a low, the market panics, and panic only forms a low, so it's a lot easier. But sometimes these rallies can kind of go beyond what you think is possible. But I still expect this is the VIX. When this ratio, when the SP is going up and this ratio is making lower highs as the SP is making higher highs, that's the bearish divergence suggestion going into a high. So I think that's what's going to happen. But kind of the VIX is saying the same things. The bearish configuration made higher highs while the SPs has made or lower highs while the S&Ps has made higher highs. Here's kind of a back history what it looks like. This chart goes back to June. You can kind of see it there. So nothing real dramatic to talk about. Will I go short? Probably not. I think the best play for me is just wait for the pullback, get along again. And seasonality wise, it'll probably be this week. But September, October is probably the two most difficult markets of performance actually of the year. September, October always show up because you get the most whipsaws, so you kind of be careful in this time frame. So I was kind of being careful, but bigger trends up. I still expect higher highs once this pullback's complete, and actually it could be a pullback this month, and actually it could be a pullback in October. So it could be a minor trading range developing here, but I'll play the next pullback. And we'll probably go back up to the previous highs and maybe stall.
And I was just doing, the VIX, I was looking at it, always waiting to talk to you, of course, on these days. And I always think about you when that VIX, maybe it even gets ahead of the market. It's not ahead of the market today, as in the market's trading lower, the VIX is trading lower. But yeah, the VIX is at 17. I was looking at it before you were coming on, Tim, and saying, man, September 3rd was the last time that we were this high in the VIX. And it's like, wow, 20 days ago. So we got some elevated VIX, of course, yeah.
Yeah, it's just trouble is the VIX, like I said, it just it warns you that a top is coming, but it didn't really tell you when it is. But actually, if you go back here, actually some of my subscribers pointed this out. Actually, you did too. I think last Tuesday or Thursday, you talked about the SPs were going up here, and that ratio was going up. So on a daily basis, so but the market still pushed higher probably for another 0.75%. So it didn't pick out the exact high, but it does warn you that something's coming. So I still think that pullback's legitimate. We can flip over the gold market. We can spend a little bit more time because I think there's some big stuff going on in the gold market.
Okay,
something we haven't seen since 2000. Me and Tom hit that. Your dad and I hit that market with a vengeance back in the day, and the only thing bad about it, I didn't get out as I should have back in 2012 at the highs. But I kind of fought the market there for a while. But so I've been through one of these cycles and what they look like, and I added more tools to it. But this is the bottom window is the 18-day average of the advanced decline for GDX. And next window up is the GDX 18-day average of the up-down volume. And I put the times, this chart goes back to 2014. And I put the times when both those indicators got above 40. And this was back in 2016 bottom. This was looks like about 2019. You got a decent rally. Here's 2000. That was a COVID crash right here. It went up. This one went up too. Anyhow, this one didn't work as a false one. But what's interesting here? We got two of those readings. Actually, we'll flip back and forth a little bit here.
Okay.
But we got two of those readings above 40. This one happened late August, back in late, and it happened again in basically mid-September. And the chart doesn't go back far enough. I took us back as far as I could to 2014. Beyond that, I couldn't get any readings, so it's pretty rare. Well, actually, it only happened once, and it's currently happening. So what does that mean on a bigger time frame? Well, one thing, it's not bearish, but what does it mean? I think it really means adds to the bullish situation. Previous times when both those indicators hit 40, minimum you went up 3 months. My kind of get this thing going. This one ran up about 6 months. This one went up 3 months. Oops, I hear the music. So I'll hold on.
Folks, hang there. We're going to come back with our man Tim. We're talking some gold. And yeah, gold right now pushing $3,800. Futures trading at $37.95. Markets in the red. Stay tuned, folks. Tim and I will be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got the S&Ps right now off by 42. Markets in the red. We got gold right now pushing highs near 3,800, 3,798. All right, Tim, we were talking about gold, and we got a question. I'm going to can I throw this in there in the middle? Because obviously, just so we have some time, because I know they rush. Did you see the volume on the close on many equities on Friday in terms of in the gold market? We had some major volume, and we had a question in the den talking about it. But I was just wondering if you saw that and if you took anything from it as we jump around.
No. I wish I did, but I do watch the GDX volume and stuff. Is volume? Actually, I have no opinion because I really didn't do analysis on it. But sorry about that. But anyhow,
no worries. There was just like Harmony had like 15 million shares on the close. They all had like an amazing number on the close at 4 o'clock on Friday. So it's interesting. But hey, this is volume as it comes in. Please, so go ahead. And what ratio are we on right now? I'm sorry. There we are. Yeah. Okay. Go for it, Tim.
All right. So anyhow, when these two indicators got above 40, the market rallied, 6 months, 3 months. This one went 4 months. This one went 6 months. My point of the whole thing is here, the last time we got two of these indicators, both got over 40, one in late August, another in mid-September. They had a minimum 3 months, so you go basically this rally at a minimum should last into year end, if possibly into March. That's my point of the whole thing. So those are the times. Here's this is kind of a blown out chart to show you what happened, and this chart is today's chart. And to get a sell signal on this chart, you need a close below -10. If you notice, we're just hanging in super strong levels above plus 30. So there's a lot of gold stocks. They're just rocketing still. They're not even taking a rest here yet. So anyhow, my point is, I think at minimum this rally will last till year end, if possibly into March. Then from there we'll get some sort of consolidation. But now let's get down into the valuations of what's going on. So this middle window, where's my... Oops, didn't mean to do that. Let me get my indicator here again. All right, this middle window is the monthly XAU gold ratio. And it goes back to, I don't know, I think it's 1996. You can't quite see it. But anyhow, this goes way back. And so I took all the history I could. So this is a market from 1996 all the way up to the current time frame. And what I did was basically between 1996 to 2008, the market bounced around in a trading range basically from 0.16 to 0.033. Bounced around in this range here, and there's minor ranges that bounced around, but anyhow it was like 26 years of a trading range on the ratio. So this is the XAU gold ratio. So in other words, if it got down to 0.15 area, that was a good buy, because that shows gold stocks were cheap compared to gold. When it got up to 0.33, which is say that point right there, which had been that high right there, gold stocks were expensive compared to gold. So it bounced around the trade range, and I actually even took it a step further in these trading range. This one bounced around in a trading range for 8 years. This one bounced around at a high level for 4 years. This bounced around at a low level for 8 years, and finally it broke out down to the downside in 2000. Looks like about 2009. And it just went through right down in the toilet, I guess you might say. And it started to bang around, and this chart's in the way here. See if I can get rid of it. Yeah, good. Looks like about 0.05 to 0.08. It's bounced around. It's bounced around in this region for 10 years, basically 2014 to 11 years. And it's going to break out at some point. Previous times, it usually lasts about 8 years before the breakout. This one's taken 10. So it's due for a breakout, either up or down. And obviously, I'm thinking up, because I've got other charts that go back to 2013, or actually 1913, that when the lowest has ever been before was 0.01 or 0.10. And we got down to 0.05. So that's basically over 100 years going backwards. But anyhow, so historically, these gold stocks are cheap, really cheap. And so what's that mean? Are we going to break out of this trading range? Yeah, I think we're actually going to break out and probably get a minimum of this 0.015 area. I think gold's going to slow down and gold stocks are going to speed up. Is what's starting to look like. And I got some... there's a couple of points I forgot. I didn't write them down, but I think this breakout's actually going on right now, and I think we're still early in the time frame. And we showed this chart last time. This is that bottom window's the monthly NDX. Next window higher is the HUI index, and this is a 12-year cycle. And the 12-year cycle is turned up. This one goes back to 1994. area, approximately where the data started. And this is the RSI of that ratio is here. And this is the first time the RSI has closed above 50 going back to 2012. So it was over 12 years ago, this RSI never got up. But once you break above 50, significantly, we're up around 60, almost 70 right now. They're 68.54. We're almost 70. So we're breaking up out of this downward trend, and finally we're starting to go up. And it started in January 2024. So I'm thinking we're going to stay up. This RSI is going to stay up above 50. And what that implies, this ratio is going to be rising in general for the next 12 years, where NDX may go up. What I'm saying is HUI will go up faster to keep this ratio going up. It doesn't mean that NDX has to go down, HUI has to go up. Both of them go up, but HUI will go up at a more rapid rate. And if you overlook, these gold stocks, they're all, 80% of them are probably penny stocks. And so the market's really just got the crap beat out of them. And so I'm thinking the whole industry is changing. This is probably the dot-coms of the 2000s. I don't know if 1990 had the dot-com. They actually called them the dot-bomb. But a lot of those dot-com companies went from $0 to $100 or penny to $100. I think something similar is going to happen here, just because the ratio on the XAU gold ratio is so cheap. It's been so cheap for so long a period of time. That ratio is due for a bounce, and I think that bounce goes at least at 1.5. If we get above that, we may go a lot higher up to here, but we'll have to wait and see. The ratio is rising now, and I think this ratio will continue rising. I think gold's probably has had its run, majority of it, and I think now they'll switch to the gold stocks and keep this ratio going higher. So on a bigger time frame, I think this is the early stage of a major bull market.
Well, that's exciting stuff, man, if that's the case, because, boy, we are on quite a run. But, yeah, when you look at that chart, man, and, boy, those pullbacks sometimes in those equities, but that is quite a chart. Tim, thank you so much for the information, the education, as always. We look forward to talking to you on Thursday, man. Have a great couple days.
All right, thank you. Talk to you then.
Thank you. Bye. Folks, check them out, ord-oracle.com. Check out those webinars under the Services tab. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets clawing back some of the losses as we come into the closing bell. I mean, didn't even plan on doing it, but check it out, right? When people talk about pullbacks in this market, look at this market, man. Look at this monthly, right? Nothing in terms of weakness. Now, monthly, you go back, yeah, we have a pullback on a daily basis. And as I was talking to Tim, we really haven't had a pullback since kind of that area he was talking about the potential pullback to, right? This is the area he's talking about because I was looking at this red bar today we have. I said, man, we haven't had like a red bar all month. You got to go back to September 5th in the S&Ps. You barely had a day, but you look at the NASDAQ 100, okay? You got to go back to September 2nd, folks, and that red candle there was only 100 points exactly. So the largest red candle we've had all month long. Now I'm talking about the body of the candle, okay? We went lower, but the day we opened and we closed 100 points lower on September 2nd, that's it, right? Nothing. We got 1, 2, 3, 4, 5 trading days that were in the red, but they were all tiny. And look how many big days we had in the NASDAQ 100. You trade up 2,000 points from the lows, and meanwhile, the only red day we've had was 100 points. Now, we still have 5 or 6 trading days left to go in this month, but it has been remarkable in terms of the acceleration, to put it lightly. And you check out gold. Great analysis from Tim, as always. And, one of the things I always look back to, right, is that area where you got that pullback from 2011. So gold peaks in 2011. And, folks, I remember, man, I was finishing college. I was about 2002. I remember my dad talking about the gold report, starting the gold report. Gold's at $250, $300 an ounce. I remember it, man. And he ran it up to the highs. Now, gold, okay, just to show you what can happen, though, when you say, man, that XAU versus the NASDAQ, right? These equities, gold went from 1,900 down to about 1,000. Almost a 50% pullback, folks, okay? But that's not a lot when the XAU went from 230 to 38. Right? The metal got cut in half, and the stocks were like, we can't handle that, man. All of their profits went away. So be careful of that one out there as well. Gold sitting near 3,800. Folks, thanks so much for tuning in. Have a great night. Have a safe night out there. We'll see you tomorrow morning for the morning market kickoff.